Hello, in this video I will tell you about that the which are the steps that we will follow and how we can get the mortgage. In previous video I will tell you about some other factors that how we can get the mortgage, like strengthening your credit, know you can how can you much mortgage you can afford or build your saving. And we also discuss about the compare mortgage loans and mortgage types and loan. So there are some types of loan that you should know about before applying the mortgage. These are some basics types of loan, like conventional loan, FHA loan, VA loan, and USDA loan, jumbo loan. FHA loan, that is also that issued by the FHA authorities, which has a less requirement. Conventional loan has such a high requirement and like high credit scores that you have to want. VA loan, and that is granted by Department of Veteran Affairs. Also, member that the for military members that is specially for the military persons to who can avail for the mortgage. USDA loans, that is especially for the agriculture, sponsored by or granted by the US Department of the Agriculture. And this is also called the Rural Development Loan. USDA loan available for the properties in design the rural area. You can check if the location is eligible by using USDA lookup tool. So you can available for you can avail the USDA loan. So there is no down payment requirement or credit score requirement by the lender. You will need to have income below the specific income limit to the qualify. Jumbo loan, that is conventional loan properties whose price tags exceed the parent threshold set for the combining loan, such as the 726,200. In most part of the country, it is country or above the 1 million 89,300 is more expensive area. If you need to finance more than that for your home, you will need to get the jumbo loan from the commercial lender. Note that these loans often come with the stricter financial requirement, including the higher minimum credit scores and the down payment in many cases. Log at the interest rate and fees each other, so which collectively amount is the annual percentage rate, that is called the APR. Even a small difference in the interest rate can result a big saving over in the long term. So also consider things like whether you will have to pay mortgage insurance and for a how long. So there are the mortgage also defined by their rates in term of the length. Term length, most home loans have the 15 or 30-year term of length, although there are the 10 or 20, 50 years, even 40-year mortgage are also available. So fixed rate mortgage also has some same interest rate throughout the length of the loan. So every payment will be the same. This predictably make fixed rate mortgage the most popular option, with the 30-year fixed rate mortgage being the standard in the United States. Next thing is that the adjustable mortgage rate. So adjustable rate mortgage, that is also called the ARM, or the 30-year mortgage that start with the lower interest rate. After their intro period, the rate adjusts based on the specific market index. So you may have seen the loans referred by as to the 5 over 6 ARM, 7 over 6 ARMs, 10 over 10 by 1 ARMs, or another combination of the number. These first number refer to the amount of the year you will lock into the an interest rate. The second number is how frequently the rate adjusts into once into period is over. 6 meaning that the every 6 months, and 1 meaning that the yearly. Many people who get the ARM do so with this plan to salary finance loan fixed payment. Now we will talk about that how we can find the mortgage lender. Once you have decided two type of the mortgage, it is same to find the mortgage lenders. Speak with the friend, family member, and your agent ask for the referral. Branch manager also for Maryland office embassy home loans also look into the rating sites perform the interest rate. So it is your decision that where you can find the mortgage lender. Either it will be the private company, banks, or private insurance company, or any other private institute that will be finance your mortgage. So if you are not sure exactly what to look for, you might be want to help a mortgage broker can help you navigate the all different loan option available that you have to possibility help you get more favorable terms that you would be able to secure by applying your own. Remember that the interest rate fees terms can vary sustainability from lender to lender and bank to bank. Hope you will compare rate from the different lender. Now there is a step 6 that the get pre-approved for the loan. Once you have settled on a lender, get proof from mortgage with this pre-proof, the lender will review your finance to determine if you are eligible for funding and the amount that you are willing to lend you. So many sellers want entertain offer from someone who has not already secured for pre-approval. So getting pre-approved is also important because you will know that how exactly money you are approved to the borrow. So be mindful that the mortgage pre-approval differ from the pre-qualification. Pre-approval involves much more documentations and the credit check. Mortgage pre-qualification is less formal and it is essentially way for the lender that tell you have to good applicant. Still, pre-approval does not guarantee that you will get the mortgage. That there has to wait until you have made an offer house successfully gone through the mortgage undergo. Now, another step is the being house hunting. With this approval in hand, you can being the seriously searching for a property. That's mean that you will need when you find a home that has a perfect blend of affordability and livability. Be ready to pounce. It is essentially to know what you are looking for and what is feasible in your price range. The finance department chair at the Federal University in Fairfield, Connecticut, says the Christiania Brats. So spending time examining the housing inventory and pre-prove to move quickly once the house that mean that your criteria goes on the market. So the other step is that submit your loan application. If you have found that your home that you are interested in purchasing, you are ready to complete mortgage application. In these day, you can complete most application online, but it can something more efficient to apply with the loan officer in a person or over to the phone. When you apply for your lender, you will perform the credit check and requirement document such as the proof of identification, including your driving license, SSN number, and other form of government issue ID cards. So proof of income, including your pay stubs, WS2S 1099S, receipt of the alimony and child supports, and the rental income. So proof of assets like bank statement, banking investment, retirement account settlements, bond stock, or etc. And the other is that the gift letters, if the friend or I gives you money for a down payment, you will need to the submit. And that the second the last step is that the wait out the underwriting the process. Even that you have pre-proof for the loan, that does not mean that you will ultimately get the financing from the lender. The final decision will be come from the lender underwriting department, which evaluate the risk of each prospective borrower and the nature of the property, and determine that the loan amount, interest rates, and the other loan. Number 10 is the close your home, new home. Once you have the officially approved for a mortgage, you will need to nearing finish the line. All that need at the point complete the closing. So a closing process differ from the bid to state that mainly it is involved from the confirming the seller has ownerships and it is authorized to transfer the title, determining if there are other claims against the property must be paid off, collecting the money of the from the buyer, disbursing to it to the seller after deducting the paying charges and fees. So there are variety of expenses that accompany with come to the closing. That includes the appraisals, organizations, title insurance, prepaids, and attorney fees, and last of all the recording fees. Along with the paying closing costs, you will review and sign a lot of documentation at the closing, includes the detail on how much fund you have to disburse. The closing or settlement against you will also enter the transaction into the public record. So that it is in this video that I will discuss about the remaining four factors that to avail the mortgage. Hope you will like this video. So take care and bye bye.